Hello, everyone. Welcome to the webinar on the top 5 steps to Bitcoin trading success. Let's wait 1 minute until everyone connects, and we'll begin. Okay, welcome everyone to the webinar on the top 5 steps to Bitcoin trading success. I promise you that this will be a good time together. I want to thank the people who organized this webinar for bringing me and bringing all of us here together. This is one of the greatest webinars on Bitcoin trading in the world, and the information that you will hear today is very important for becoming a successful trader. This webinar is designed excuse me 1 minute. So, this webinar is designed for active traders trading on Forex and cryptocurrency markets, and is suitable both for beginners and as well as for advanced traders. By the way, cryptocurrency market, similar to the Forex market, provides excellent opportunities for active trading because it has high liquidity, strong trends, and high leverage is also available. Therefore, these markets are exceptionally attractive for intraday trading. My name is Alex Sofpel. I'm a professional financial analyst and trader. I have 10 years of practical experience in trading and investing, including trading on real accounts for myself from 2017. My style of trading is active with medium-term targets, and I trade primarily on Forex and cryptocurrency markets. Throughout the past 10 years, I've analyzed thousands of charts and technical indicators, developed my own algorithmic trading strategies and risk management systems, and performed hundreds of strategy backtests and optimizations. As a result, I have ideas and insights that can literally transform the way you think and trade. And today, I will be happy to share my experience with you. So it's really important that you take good notes and that you write down ideas. Now, I'm going to give you some great ideas, and I'm going to give them to you in 5 short sections. But first of all, I want to ask you a question. And the question is, what's the ultimate goal of every trader? What every trader strives to achieve? Well, when I first came up with this question, I thought that it should be high profitability, meaning the ability to generate high returns, large amounts of money on small investments. But then I realized that the true goal and the ultimate success factor of every trader is consistency in generating profits, and not the amount of profits itself. The ultimate goal is to generate profits every month consistently, thus making trading a true money-making business instead of a game. The amount of profit in dollar terms doesn't matter without consideration of risks assumed to generate that profit in the first place. And why is that? Because you cannot make a living from trading if you are not sure that you are capable of making money consistently. Nothing will make you angrier than seeing that your trading account has been lost completely, even after a series of profitable trades. So I've studied this subject for years, and what I found is that if you want to achieve consistency and profitability in trading, then you must have a rules-based trading strategy. A trading strategy is a system which allows you to make trading decisions based on exact signals and risk management rules rather than on random guess or market noise. This is what differentiates the top 5% of successful traders from the bottom 95%. The top 5% of traders have a profitable trading system that generates consistently accurate trading signals for them, while the bottom 95% of traders do not have such a system. So I was quite amazed when I found out that a trading strategy allowing to make accurate trading decisions is one of the most important factors that will make you a successful trader. And by the way, if you think about other professions or businesses, strategy and discipline are some of the most important factors for success everywhere, and trading is not an exception. Now, to prove you that successful trading strategies do exist, I want to show you some real-life trading signals that have been very successful. These trade signals were prepared by me and are based on a trading strategy. So I'm going to show you 10 out of 30 signals which I've been publishing on TradingView over the past 3 months for the Monfex's community of traders. And let me explain to you quickly how to read these charts. For example, this trade recommendation has been published on March 11th when the Bitcoin was trading at 3,900. So these bars to the left are actual historical data at the time the signal was published. And this blue drawing represents my forecast. And this, if I press this button, it will load new bars and you will see how my forecast actually worked out. As you can see, it's been accurate. And this particular trade generated 120% return with 10 times leverage. Here is another trade on Ethereum. Even though the timing was slightly wrong, which is normal, the trade itself was highly profitable with minimal equity drawdown. And this trade was extremely accurate in terms of both market timing and direction. Just look at this. Let me show you some more examples. In this signal, I recommended buying Bitcoin at 4,600 with a take profit target at 6,000. The signal turned out highly accurate in terms of timing and generated 300% return with 10 times leverage. And take a look at this signal, for example, highly accurate. And this one, this is, by the way, Tesla. I recommended selling short from this price. And here is another signal, also highly accurate. And this is another one, also highly accurate. And this is one of the latest. And take profit also been achieved. So, as you can see, some of these signals were amazingly accurate. And while some of them were less accurate in terms of timing, they've also been highly profitable. And these are real signals. These are not some historical tests or graphical design. These are real high-quality forecasts that generated positive returns. And you can verify this yourself on TradingView. And why am I showing you this? Because my goal is to demonstrate to you that these signals have been consistently accurate, not because of luck, but because of strategy based on technical analysis and fundamental research. So, as I said before, the number one success factor in trading is to develop a rules-based trading system and then discipline yourself to stick to it all the time. Probably you're asking now, what should I do to develop a trading system? And normally I could talk about this for 3 hours, but my best recommendation for you is this. Learn from experts and successful traders and practice trading every day. For example, you can subscribe to my channel on TradingView, the Monfex channel, which is absolutely free, and read carefully the analysis attached to every trade signal, like this one, and then practice on your account. The strategies and insights that you will find in these trade signals will help you to become proficient in building trading systems faster than anything else. And by the way, this channel on TradingView is probably one of the best in the entire industry. It received almost 50,000 views over the past 3 months and lots of positive and grateful feedback both on TradingView and bitcointalk.org. Certainly, some of these 50,000 traders have made solid profits and may have learned lots of new ideas and insights. So you can benefit from this information too. All you need to do is to sign up on Monfex's trading platform, and you'll be automatically subscribed to my trading signal service. And over time, while you practice, you'll get better and better at trading, and finally, you'll become consistently successful. So we've reviewed the number one step to successful trading, which is to develop a profitable rules-based trading system. Now, the second most important step to successful trading is to become excellent at identifying market trends. Here is an important insight for you. Market prices are unpredictable. You cannot forecast future prices with complete certainty because the future is unknown by definition. But what you can do is to follow the trend. Does that make sense? So your goal as a trader is to identify the current direction of price changes and then follow the trend. And this is one of the most important conclusions I've made as a trader. Even though market prices at their core are random, they tend to move directionally. I'll say this once again because it's extremely important. Even though the evolution of price changes is a random process, prices tend to move directionally, either upwards or downwards or sideways. And as I said, I've done lots of research and strategy backtests trying to study the behavior of price trends. And what I found is that approximately 70% of time, prices are in a trend mode, either up or down, and 30% of time they are flat. So if you become skilled at identifying trends, you will be able to buy at low prices and sell at higher prices, thus making money. And how do you become skilled at identifying trends? You do it by application of technical analysis. Now, I won't speak about the specific tools of technical analysis because it's a completely separate subject, but I will say the most important thing. Technical analysis does work, and it is very powerful. However, it has certain limitations. In fact, technical analysis is the only way to analyze cryptocurrency and forex markets for intraday trading. If you don't know at least the basics of technical analysis, then you should learn it. Otherwise, you won't be able to trade cryptocurrencies intraday. Trade signals I've shown you 5 minutes ago that have been very successful and profitable were generated based on technical analysis. And what is technical analysis? The essence of technical analysis is studying price charts using technical indicators and with the goal to eliminate market noise and identify the true direction of the price trend. The most important tool in technical analysis is called indicators. Technical indicators generate signals allowing to make decisions about how and when to trade. The essence of any technical indicator is a mathematical formula which allows identifying market trends which are invisible to the naked eye. Now, let me show you something that will change the way you think about technical analysis forever. This is the clean chart of Bitcoin versus the US dollar. At first, it seems like a completely random walk. In fact, this is how it's seen by the majority of traders that lose money. And this is the same chart of Bitcoin with a custom trend indicator that I've developed myself through hard work and research. As a technical analyst, I see the same chart in a completely different way with a clear signal of where the market is going. This is another daily chart of euro-dollar, the most popular currency pair on the Forex market. If you look at this chart, it looks like completely random noise. Now, this is how I see the euro-dollar market with my strategy based on technical analysis. I know that the market is trending downwards. I know where I should sell and where to take a profit. So the reason I'm showing you this is to prove that technical analysis does work and is very powerful for intraday traders. So my recommendation to you guys is study technical analysis and you will become successful. By the way, we are working hard to implement this and other trend indicators directly into the Monfex trading platform so that you could see clear trade signals and price targets right on the chart in the trading platform. This will be a truly innovative solution for traders. Okay, let's move forward. The third most important step to successful trading is that you need to become excellent at using the trading platform. You must be highly proficient with the trading platform because it's a primary tool that you as a trader will use to analyze price charts and make trading decisions. Luckily, it's relatively easy, and I'll show you quickly the major components of a trading platform. This tab is a price chart. Price chart is this tab is called the Market Watch. Market Watch shows all the financial instruments traded on a platform. You can click on any instrument to open its chart. This tab is called Price Chart. Price chart is a visual representation of historical changes of the price. You can analyze different time frames that are relevant to your trading strategy. You can choose between bars, candles, and other types of charts. You can use powerful technical indicators that I've been talking about a minute ago, for example. So you can add indicators to analyze price trends, volatility, and oscillators. You can use drawing tools to find chart patterns by applying trend lines and trend channels, and so forth. Here is a new order tab, or the trade tab. In order to trade, you must know how to submit a new order. And you can use limit orders, market orders, and stop orders to execute trading strategies of any complexity. The next tab is called positions. Here you can observe your current profit or loss for an entire trading account. The profit is shown in the base currency of the trading account. And the next three tabs are open orders, activity log, and your account history. Now, these tabs reflect standard functionality that you will find in any trading platform. However, what is truly important and what you should always pay attention to is the amount of spread and commissions in a particular trading platform. A spread is the difference between the best bid and ask prices, and the amount of spread will significantly affect your profits. So when selecting a trading platform, you should always ensure that the spread is narrow. A narrow spread means that the market is liquid and you can quickly open and close positions without incurring significant losses. For example, in this trading platform, the spread on Bitcoin is approximately 60 cents. less than $1, which to my knowledge is good, because there are many trading platforms out there that charge a spread from $10 to $20 for trading Bitcoin, which is a lot more than 60 cents. Also, most trading platforms charge a commission per trade, which can significantly reduce your profits. So my advice to you is trade on zero commission trading platforms. So the fourth step to successful trading is diversification. The concept of diversification relates to risk management and means that you shouldn't invest all capital in a single asset. Or equivalently, if you are a trader, you shouldn't trade on a single financial instrument. Diversification will help you to avoid disastrous outcomes for your trading account. A perfect example would be investing in Bitcoin in late 2017, when its price was approaching $20,000 per Bitcoin. As we all know, this price became an all-time high, and since then the price depreciated by more than 85% at its lowest point in 2018. So lots of investors and margin traders have lost their deposits, and they could have avoided this outcome if they had diversified their trading into other asset classes, such as Forex and stocks, for example. Another important example, which is extremely relevant to active traders, is a situation when your trading system begins to generate a long series of consecutive losses. As a result, this leads to a significant drawdown of the trading account. And this often happens even for experienced traders, because a trading system may begin to generate false signals due to changes in market conditions, which may lead to a long series of consecutive losses. So the question is, how do successful traders deal with this problem? Well, the answer is that successful traders spread out their risks among many trading instruments. So my practical advice to you, never trade on a single asset, such as Bitcoin, for example. Select the top 5 most liquid cryptocurrencies and also add other asset classes such as Forex and equities and trade them all. Over the long term, your profitability will be much more safe and consistent. And finally, the 5th step to successful trading, which is also very important, is effective risk management. Risk is an integral part of trading. Market prices are never predictable with complete certainty, and every time you enter a trade, you become exposed to the risk of losses. But the risk is not just a matter of fate. It's something that successful traders always control using appropriate risk management tools. So the question is, what are the best risk management tools in trading? Well, there are 3 major risk management techniques that you should follow if you want to achieve success in trading. The first risk management rule is never trade with high leverage. Leverage is an important tool, and trading with leverage is standard practice for traders on all markets worldwide. This is because with leverage, you can increase potential profits. Now, some exchanges provide up to 100 times leverage for Bitcoin trading, but my recommendation for you is, when trading Bitcoin, use leverage not higher than 10x, 10 times, and here is why. If you buy Bitcoin with 100 times leverage, the amount of required margin will be 1% of the purchase price. Now, the average volatility on the Bitcoin market is 3 to 5%, meaning every day the price changes on average 3 to 5%, which is 5 times larger than the 1% in the required margin. So there is almost a 100% chance that you'll get a stop out and your position will be liquidated with a single day if you trade with 100 times leverage. What you should do instead is to trade Bitcoin with an optimal level of leverage, and this is the leverage of 10x, 10 times. With 10 times leverage, your account will be able to survive unpredictable intraday deviations in price while increasing your potential returns 10 times. And this is why here at Monfex, we've decided to set a standard amount of leverage at 10x, which is reasonable and very close to optimal for intraday traders. However, you can still use up to 50 times if you wish so. So the second risk management rule is always to trade with stop loss orders. Stop loss orders are used to limit losses on market positions. For example, imagine that you bought Bitcoin at $10,000 and want to limit the maximum possible losses to $1,000. In order to do that, you should place a stop loss at 9,000. If the price falls below 9,000, the stop loss order will be triggered and your losses will be limited to 1,000. The use of stop losses is perhaps the most important mechanism of risk management of all. And the third risk management rule is to trade on liquid instruments with narrow spreads. Less liquid instruments are those that have low trade volumes and a lack of investor interest. To avoid liquidity risks, you should trade only on most actively traded cryptocurrencies. This will ensure tight spreads and high execution speed of your orders. In addition, technical indicators generate more accurate signals on actively traded, highly liquid markets. The most actively traded cryptocurrencies in addition to Bitcoin include Bitcoin Cash, Ethereum, Litecoin, and Ripple. So my advice to you is to allocate your trading account into 5 equal amounts and use each portion to trade on each of the 5 cryptocurrencies I've just mentioned. Thus, you'll have a diversified trading portfolio composed of highly liquid cryptocurrencies with tight spreads and high execution speed of your orders. Now, my time is almost up, so I want to leave you with this final point. Today, I've given you enough information that you can use to dramatically increase your profits and succeed as a trader. There are no shortcuts to success, so you need to learn new skills and practice trading every day, and eventually you'll become a profitable trader. And don't worry if your first attempt to trade wasn't working and you've lost the money. It's okay. It may take many attempts to change your trading strategy and optimize your risk management rules before you find the one that works. Therefore, don't ever be afraid to try new strategies in trading and fail, because the only way that we learn to succeed is by failing over and over again. So try new strategies, fail and learn, then try again. Try, fail, and learn, then try again. And if you'll do that, eventually you'll find the way that works. And remember, trading is a type of business in which you have to have the courage and patience to try new things with no guarantees of success. That's the hallmark of all successful traders that I've known about. Now, so if you like what you've heard today and would like to receive trading signals and investing ideas from me and from the other experienced traders, sign up on monfex.com and you'll be automatically subscribed. If you'd like to contact me for any reason, please use an email address or LinkedIn account you're seeing on the screen. I will devote a portion of my time to answer each of your questions. Thank you for listening, and I wish you profitable trading.